Hi everyone, let's go over my micro and local bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bullish scenario where we're looking at a finished WXY double zigzag scenario to the downside, where wave Y ended at the 0.618 trend base fib extension taken from the high to the low of W to the high of X, which is one of the targets for a wave Y. What you can also see though is that the lows over here of this wave Y are made before the fib times on the chart, the vertical lines. And these fib times are taken from the same pivots to compare wave W in time with Y in time. Most commonly, wave W and Y have around a 1-to-1 relationship, and second most commonly, we have a relationship around the 0.618 and the 1.618. But you can see this low has been made before the 0.618, which is a little bit less common. Now in this scenario, if this is the low, we then want to count impulsive structures to the upside, not corrective structures. So we want to either have a wave A or a wave 1 over here, for then a corrective structure and continuation in a wave C or a wave 3. Now if we zoom in to the lower time frame here, let's first look at this move to the downside, because for a wave Y, you want to count this as a double zigzag as well. Now in this scenario, I have to go to the 5-minute, then we have wave W over here, and then a 3-wave structure, an A, B, C, sideways range in a wave X, for then eventually wave Y to the downside, where this is the first structure, 3-wave corrective structure, as you can see here, for then a final structure over here, wave Y to the downside in some sort of a diagonal. It's not too clear to count 5 waves to the downside over here, as you can see, in a potential there 1, 2, and then like 3, 4, 5. That's probably how I would do it, as this wick over here is below this one. So then we have a 1, 2, then we have a 3, 4, and 5, finishing wave Y, 3-wave structure finished, and now we're looking for a move to the upside. The move to the upside though is a little bit more interesting after then this wave Y bounced, by the way, also on a common target for wave Y, being the 1.236 taken from the high to the low of W to the high of wave X. Just wanted to mention that right there. But the impulse to the upside, that is quite interesting, because if this is the low, we can count a nice first structure over here. 1, 2, 3, 4, 5. Beautiful. But then the problems start with this second structure, because we can count 1, 2, 3, 4, 5, but then wave 4 retraced to the golden pocket, which is extremely rare for a wave 4. And if this over here is your wave 5, it looks very 3-wavy and not 5-wavy. But if we put the wave 5 on top here and we say 1, 2, 3, 4, 5, then wave 3 is the shortest wave between 1, 3, and 5. So counting an impulse in this move to the upside is not easy, which lowers the probabilities for a big continuation to the upside, where then you want to see price going above this high over here, and it increases the probabilities for price to eventually find more downside. Of course, the invalidation for more downside is if price does reach this level over here at 26.7k. Now, if we then zoom out again to the micro bearish scenario, we still expect a move towards the downside. So here we then have again WXY. Then in Y, we are looking for a 3-wave structure to the downside, still in a zigzag, meaning this is now a 5-wave structure to the downside, followed by a 3-wave correction. And eventually we are looking for another move to the downside to hit this support area over here, which is sitting between 25.7k and 25.9k. Now over here you can see again the same fib times, right? Taken from the high to the low of W to the high of wave X. We already passed the 1-to-1 for potentially a low of Y. The 1.618 is still in there, but of course it has to happen quite quickly for price to move to the downside and hit that 1.618. The longer this range is continuing over here, the lower the probability that price will go down once more for a wave Y, and the higher the probabilities that price will move to the upside. Now we haven't yet reached the 1.618, which is set for tonight European time, Central European time, 9 p.m. So we have more than enough time to continue the range here and eventually move to the downside. Even if we pass the 1.618 by a bit and then move down, that's okay. It's just that the longer this would continue after the 1.618, the lower the probabilities for a move down and the higher the probabilities for a move to the upside. That also makes me say that the resistance that we have just above price over here, important for a potential bearish scenario as well in case price moves up, is over here between 26.5k and 26.6k. Now if we then zoom in to this structure over here for the bearish scenario, we want to count three-wave structures from this low to the upside. Now in this scenario, we have to count this as a 5-wave structure and then somehow a 1, 2, 3, 4, 5. Doesn't make life easy that the first move to the downside over here looks very 3-wavy, maybe like 1, 2, 3, 4, 5, right? That's like forcing a 5-wave count here, and then a wave 1, 2, then a 3, 4, and eventually we have a wave 5. So it is a possibility. Both of these scenarios, a WXY or a 5-waver, is a possibility. It's just that this move to the upside over here looks less likely to be an impulse and more likely to be a 3-wave structure in an ABC zigzag. And if this is then a 3-wave structure, then you expect over here then a wave W, and then eventually a X and a Y, or wave Y is already in, and then a WXY finishing wave B, and this is the beginning of C to the downside. As you can see though, this wave C is then taking a very long time to fall to lower prices, increasing the probabilities a bit for at least maybe a bit more of a bounce before a move down, or at least to take this high over here. Also, this wave Y did not take the 0.618, usually a minimum target for a wave Y, taken from the low to the high of W to the low of that wave X. So we are still looking for lower prices in this scenario, but then directly to the downside, while in this scenario we first want to see a move to the upside. So over here we then have again ABC, but this wave B target is a bit higher. And I should actually also include the 0.618, because potentially here we have then a WXY, where that 0.618 is an interesting target, also sitting at 26.3k, which is also a target for the high then of this potential wave B. Something to keep in mind. And if we zoom in and I check this structure, it looks 3-wavy here as well, and then a 5-wave move. Of course, we could say 1, 2, 3, 4, 5. The problem here is that if this is a wave 4 and this is your wave 1, there's overlap, which means we have to start talking about diagonals. But in a diagonal, if this is your wave 2, you're not allowed to have a flat. You want to see a zigzag pattern and then a 1, 2, 3, 4, 5. So this looks like a 3-wave structure in an ABC, which increases the probabilities to at least locally take this high over here, see a little bit more upside potentially. We also have a new fresh daily over here at 26.3k, so that's something to keep in mind for then eventually a move towards the downside for then wave C. And you can see I still have an invalidation here. It's a little bit based on what happens more locally. If price just does this, I'm also fine with it, because it starts to become difficult to count this structure in a lot more detail. But what we know is counting an impulse here is quite difficult, increasing the probabilities that price will eventually take this low still, so that we still expect more downside to come. If we look at the CVD divergences, bearish and more bearish CVD divergences, as mentioned yesterday, price pushing towards the downside. Over here, again, bearish CVD divergences, which played out. Price took this low over here with a wick, but now we have at the lows over here a double bottom as well, and this candle hit the 886. And that is quite important, because if an 886 is hit, you always have to think, if we're talking about an impulse, can this be a wave 1, 2, and then a bigger 3? Well, wave 2, rare target is the 886. So the moment the 886 is hit, probabilities for a potential wave 2 and then a 3 for bigger, like higher prices, lowers. The probabilities increase after a B, or after the 886 is hit, for a wave B or a wave X, meaning then the following move has a higher probability of being a C or a wave Y. And that means the probabilities are then higher for Y or C to then eventually, after Y or C, find more downside to then take these lows again. The same over here. This retracement hit the 886. Probabilities are therefore high to then take this high as well, especially now we have another double top more locally, because this high over here actually didn't take the high on the left. So I do expect this high to be taken. Also, the daily is here, of course, at 26.3k, so we have to observe the reaction very carefully, see if anything happens, for then eventually probabilities higher for still another low to be made. If we look at the news, we do have news this week. Today is a calm day, as you can see, but tomorrow, 10 p.m. Central European time, we have a red flag, and also Friday, 2:30 p.m., we have another red flag over there because of news. Now, that might increase volatility, so make sure you trade safe around these hours. And if we then finally go to the probabilities of the different scenarios, then on the micro, seeing another move to the downside currently has the higher probability, mainly because counting an impulse over here from the low is very difficult. Wave 4 hitting the golden pocket, or wave 3 is the shortest wave. That's not what you want to see in an impulsive structure. It's not impossible that wave 4 hits the golden pocket. It's just so extremely rare. I can't even remember the last time that happened. So that increases probabilities for still a move to the downside, to hit this low, and then looking for this target box to be hit as well. And from the local scenarios, the more bullish scenario over here has a higher probability where we at least take this high. And for me, taking this high and then it's waiting and see what happens. If we take it more impulsively, if we hit the 0.618 and down, like wicking through the daily maybe, and then a move down, difficult to say. It's difficult from here, this point onwards, to count the structure that we have. So it's, we have to be patient, but that's simply the probabilities from an Elliott Wave scenario at the moment. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.